Welcome to this farmdoc webinar presentation. I'm Darrel Good, and today Scott Irwin and I will be discussing the implication of the USDA's grain stocks and prospective plantings reports for corn and soybeans. The format of the webinar will be about 30 minutes of presentation, followed by about 30 minutes of questions and answers based on the questions submitted by the attendees. We will select questions from those submitted. You may submit questions using the texting window on your screen. I want to start by discussing the corn situation first as revealed in today's reports, and we would start with the March 1 stocks report. As you can see on the screen, we compare the March 1 stocks estimate this year to previous year's estimates and also to the average trade guesses. USDA said today that March 1 inventories of corn were just at 7 billion bushels. That compares to the average trade guess at 7.1 billion. So about 100 million bushel surprise in the stocks estimate. 98 million bushels to be exact was the difference between the USDA's estimate and what the market was looking for. Again, Figure 2 puts that in context of previous March stocks reports, where you can see that in recent years we have seen some fairly large surprises, with the largest one being last year when the difference was almost 400 million bushels between a USDA estimate and what the market was looking for. So the difference of 98 million bushels this year is fairly tame compared to where we have been. The major use that we make of the March 1 stocks estimate is to estimate the amount of corn that disappeared in the feed and residual category during the first half of the marketing year, and then we use that estimate of disappearance to project what disappearance might be for the entire marketing year and whether or not there would be a need to alter the previous projection. So as you can see on Figure 3, based on today's report added to the December 1 stocks report that allowed the calculation of feed and residual use during the first quarter of the marketing year, we estimate first half use at 3.85 billion bushels. Again, that's a fairly large number compared to where we have been in recent years. And it really kind of confirms the big disappearance that we saw in the first quarter of the year. As indicated by the surprise in the report, the market was looking for disappearance during the first half to be slightly smaller than what is suggested by this number. So taking that as given that in fact we did disappear a little over 3.8 billion bushels for the first half of the year, then in Figure 4 we asked the question, based on previous seasonal patterns of feed and residual use, is there information in this report that would alter the USDA's projection of feed use for the year? And that analysis is made difficult to some extent by the changing seasonal pattern of feed and residual use that we've seen in recent years. I show on this graph the previous 4 years where we see feed and residual use during the first half of the year accounting for the lion's share of consumption, averaging 74% of total marketing year use that occurred during the first half of the year. If you look at the box to the left side of the graph, you see how that compares to historical disappearance. In the period 2006 through 2009, first half disappearance accounted for only 68% of the total. If you go the 10 years before that, 96 through 2005, disappearance in the first half accounted for only 64% of the total for the year. So what should we expect this year? What kind of a seasonal pattern should we expect? Disappearance as calculated as a percent of USDA's projection of 5.3 billion bushels would be 73% this year. So is 73% the right number to expect in terms of the seasonal pattern this year? Or is there enough difference there that we should expect in the upcoming WSDA report that USDA might change the projection of feed and residual use 5.3 billion bushels as shown in the balance sheet here in figure 5. I think people are going to reach different conclusions on that. One thing that folks are looking at is the reduced number of animals that we probably will be feeding during the last half of the marketing year. Friday's Hogs and Pigs report showed that we had a smaller inventory of market hogs, a smaller winter pig crop than a year ago, suggests that we will be feeding fewer animals during the last half of the corn marketing year. We know that cattle on feed numbers will be down because of a smaller feeder cattle supply. We're seeing only modest changes in the number of broilers being produced. Probably will see some modest pickup in dairy cow numbers. But overall, animal numbers during the last half of the marketing year will probably be less than a year ago. Offsetting that to some extent, I would guess, will be less wheat feeding this summer because of higher wheat prices relative to corn. So taken together, my conclusion, and I guess I would say our conclusion, I want to get Scott in on this as well, is that we would not see enough information in today's stocks report for USDA to alter their projection of 5.3 billion bushels for the year, and that would suggest then that we would still be looking at prospects of year-ending stocks of just under 1.5 billion bushels. While there was no new information in today's reports about the other categories of use, we have to mention that there is some possibility that consumption in the other categories, particularly ethanol and perhaps exports, will be a bit larger than what is currently contained in the USDA's balance sheet. But that, again, would be our speculation, and we'll see whether that's confirmed in the April WSDA report or not. But based just strictly on the information garnered from today's stocks report, we would not see a change in the balance sheet in April. That brings us to the new crop situation then, and the information we were looking for in today's report was what are farmers' intentions in terms of planting corn in 2014. We'll show you a history here in figure 6 of planted and acreage harvested for grain with today's number from USDA intentions of just under 91.7 million acres, and as indicated in the red box there, that's about 1.2 million less than what the market was looking for. So I think everybody was leaning towards a smaller number on corn, but the intentions came in just a bit smaller than what the market was looking for. So the next step in using that number then is to translate that into likely harvested acres of corn in 2014. And in figure 7 we do show you the history of planted acres minus acres harvested for grain. So that difference, well, it does reflect to some extent abandoned acres. Most of that difference is acreage harvested for silage. And as you can see, there is quite a bit of variation in that difference from year to year with what I would characterize as reasonably good growing seasons. You have a smaller difference, and with really adverse conditions such as 2012, we see a larger difference in those two numbers. So for projections purposes for 2014, we would settle on some kind of average number or typical number difference between planted and harvested, and I'm using in the balance sheet then a difference of about 7.3 million acres. The second ingredient in terms of forecasting crop size beyond acreage would be what do we expect the average corn yield to be in 2014. We don't have enough information at this point to make an informed calculation or informed expectation about yield. So what most of us do is settle on some concept of trend yield. But even there's a lot of difference of opinion about the correct way to calculate trend yield. Figure 8 shows you the history of actual corn yields in the U.S. since 1960, and that's the base period we use for calculating trend. We then condition those actual yields based on weather conditions, so we try to normalize weather conditions over time, and as a result then we would calculate a weather-adjusted trend yield, and we show that then in the balance sheet for 2014-15 at 163.2 bushels per acre. Just as a side note, that is smaller than what the USDA uses as a calculated trend for 2014. I think they're at least 2 bushels higher on their trend calculation than what we are. So starting with the 91.7 million planted, as indicated in today's report, then we would forecast a harvested acres of 84.4 million, a yield of 163.2, would give a total production of just under 13.8 billion bushels. That would be about 150 million bushels smaller actually than the 2013 crop. Adding to that our beginning stocks and imports, we would see a total supply of about 15.25 billion bushels of corn for the 2014 marketing year. Then translating that into kind of a carryover and price projection, we would have to make some forecast of how much corn will be consumed during the upcoming marketing year. And again, it's early to make very accurate forecasts, but what we're showing here is with expected large crop and now with somewhat lower prices, my expectation would be that we would see a high rate of consumption of corn in the 2014 marketing year. And so we see a projection of increases in every category, a total consumption of 13.6 billion and a carryover of 1.6 billion bushels. Putting that into a stocks to use ratio, that would be a ratio of just under 12% for next year compared to about 11% for this year. To me, that does not point to a large decline in the average price of corn. You would say marginally lower perhaps than what we're going to average this year. I've suggested 4.25 as perhaps where we might be on a price. The market is currently offering a higher price than that, probably reflecting some production risk at this point, given what looks to be a late start to the planting season and some concern about the ongoing drought conditions in the western part of the growing area. So I think the market is reflecting some risk premium at this point, but good news is even with a large crop next year, corn prices should be maintained at prices near what we've experienced for the current marketing year. Starting with figure 10, we kind of run through the same kind of numbers for soybeans. March 1 inventories, 992 million bushels, almost identical to our inventory of a year ago, and just slightly larger, essentially the same as the average trade guess at 988 million bushels. So on the surface, not a large surprise there. When you look at the difference between the actual estimate and the average trade guess, 4 million bushels is really quite small compared to some other years, particularly last year. So you would say on the surface, no surprise in today's stock report on soybeans. I'm not sure how we square the price reaction to that today. We did see a pretty strong up move in old crop soybean prices. I think ongoing strong exports and prospects for pretty small year-ending stocks still continue to be very supportive for old crop soybeans, but really no new bullish information in today's stocks number. You'd have to say on the surface one of the more neutral reports that we've received in recent years on March 1 stocks. We don't make as much use of the March 1 stocks number for soybeans as we do corn. For corn, since feed and residual is such a large category of use and it's a category that's not estimated on a continuing basis, it's only revealed with the quarterly stocks numbers. That means that those stock numbers become very, very important in gauging the pace of consumption. That is true to a much lesser extent for soybeans. The majority of soybean consumption is exports and crush, and we know those numbers pretty clearly in advance of the stocks report. What the stocks report then tells us is what was the seed, feed, and residual use of soybeans by quarter. And what I show in figure 12 then is calculated seed, feed, and residual use for the first half of this marketing year compared to the previous 4 years. And as you can see, implied use, calculated use falls pretty much in the range of where we've been in the last 4 years. Don't ask me why, but we do see last half seed, feed, and residual use always being negative for soybeans. The magnitude of that negativity varies quite a bit, but there's not a strong correlation between the magnitude of use in the first half and the magnitude in the second half, as indicated there in the light blue box. For the last 10 years, there's a correlation of about a negative 0.3 between residual use in the first half and the residual use in the second half. So what this says is we're on a pretty normal pace, no big surprise in the report. What people do on occasion is try to use the magnitude of residual use to guess how the USDA might change its production number. They do that in several years following the September stocks number. But in figure 13, I just looked at the last 10 years and calculated the correlation between the magnitude of residual use of soybeans during the first half of the marketing year and the subsequent change in the production estimate. And if you look at the full 10-year period, you do see actually a negative correlation, which doesn't make a lot of sense, almost 0.5, but that's almost entirely driven by that observation in blue there. That was 2007, when we had a very small first half residual use, which might mean that USDA had underestimated the crop, but in fact, yes, that had underestimated the crop, but in fact USDA increased the estimate in the subsequent report. So again, there's just not much information in the residual calculation for soybeans as there is on corn, and particularly this year with that number falling within range, really not too much to read out of that number. As a result, there's really nothing that would, I think, alter the balance sheet for soybeans from the USDA's March WASDE report as presented here in figure 14. We do, as I mentioned, continue to see an ongoing very rapid pace of exports and export sales. and that's something that's going to have to eventually get resolved. We've continued to ship soybeans at a very fast pace, and we've sold more beans than we have, and that's the reason for the ongoing strength in old crop soybeans, but that's information that's not new. This stocks report added nothing to that that we didn't know going into the report. Finally, on the soybeans planted acres, we see intentions here at almost 81.5 million acres. The trade was rightly looking for a big increase in intentions. The average guess was 81.2 million acres about, so we did come in just slightly higher than the average trade guess. Much of that increase on a state-by-state basis came in North Dakota. We see about a 1 million acre increase expected in North Dakota this year. Also indicated on that chart, the difference between planted and harvested acreage of soybeans in most years is quite small, typically less than 1 million acres of abandoned soybeans. You can see that more clearly in figure 16 as compared to corn, which includes the silage number. It's rare that we get more than 1 million acres difference between planted and harvested for soybeans. And so this year I would plug in kind of a typical number, about 800,000 acres or so likely difference between planted and harvested. And then like corn, the question is what kind of yield should we expect on soybeans? Falling back onto a trend analysis, using actual yields and then conditioning those on weather in each of the growing seasons, we would calculate trend yield for 2014 at about 44.5 bushels per acre. So what does that mean for the balance sheet for 2014? 80.7 million harvested, 44.5 bushels per acre gives us a crop of just under 3.6 billion bushels. Again, about 300 million larger than the 2013 crop. Even with some significant increases in consumption, if we bump that up 110 million bushels overall to 3.43 billion for the year, we still get ending stocks next year over 300 million bushels, which is approaching 10% stocks to use ratio. So that's a very dramatic change from what we've had the past 2 years with kind of pipeline inventories running around 4.5% stocks to use ratio. So with those early calculations, we would see dramatically lower soybean prices next year than we've had the past 2 years. I would start by saying the $12.95 forecast for the current year is maybe a little bit on the light side. I think we may end up above a $13 average for this year. And I would look for something, I've penciled in $10.50 here, but $10.50 to $11 perhaps average price for soybeans next year. So a buildup in inventories is something we haven't experienced for a while, and that would push prices back to more of a long-term equilibrium level on soybeans. Now, I do want to just kind of finish up here by saying the acreage numbers are actually intentions numbers, as you know, and I think it's useful to keep in mind that what we actually plant in some years can differ fairly dramatically from intentions. Figure 19 is a look at the history of corn, actual planted acres minus March intentions, and you can see that those do or have varied considerably over time, and the way that spring weather unfolds and the way prices behave between now and when planting is finished probably will influence that to some extent. When we look at soybeans, we also see similar type differences between intentions and what actually gets planted. Contrary to popular belief, I think those don't always offset in opposite directions. We tend to think that, okay, if we get more than intended corn, we'll get less than intended soybeans. But when we look at figure 21, we see that some years those move in opposite directions. Some years they move in the same direction. And so when we add those together in figure 22, it's interesting that when you look at combined acreage of corn and soybeans, those some can differ fairly significantly from intentions. We've seen as much as 4 million acre increase to 3.5 million acre decline compared to intentions in recent years. So do we have any guess about where that might come out this year? One thing we like to do is look at intentions for total acreage of all crops plus harvested acreage of hay and compare that to last year to see if there's what I would call any unaccounted for acres or acres not accounted for in the March intentions report. And when we added those up today, we found that intentions are about 650,000 acres more than what was actually planted last year for all crops that are included in this report. Recall last year we had an unusually large amount of prevented planted acres estimated at 8.3 million acres. So one would have expected that intentions for all crop acres could have been much larger than what was reflected in today's report. And my guess is that we may find, in fact, that total acreage does exceed intentions. What crop or what crops will that affect? And my guess would be, given the price reaction that we've seen following these reports and weather permitting, I would expect that we may see more corn and more total feed grain acreage than what was reflected in today's report. So the balance sheet that I presented is taking today's report at face value. I think probably eventually we'll want to fade that to slightly higher acreage for corn. Soybeans, I think, is a little harder to call. I think we can get more corn without fewer soybeans, and we won't really have a look at that until we get the actual acreage report at the end of June this year. So trying to stay on time here a little bit, that concludes my comments. We're prepared to try to respond to questions that you may have had, and we'll do that. And just to remind you that you can continue to submit questions or comments during the remainder of the presentation. So the first question is, what happened to last year's prevented planted acres? And the answer is, so far as we don't know. My guess is that some of the respondents to the survey, particularly in northern growing areas, may have already factored in some prevent plant for this year, given that there's a fairly major snowstorm moving through there and it was cold and when the survey was done. So that may be part of it, and part of it may come back to that we'll find a few more acres when we get the June acreage report. The second question is, will the late planting have an impact on corn yield since the soil temperature looks not that optimistic for the first half of April? Our work would suggest, and the work of a lot of experimental agronomists would say, that there's a pretty wide window of optimal planting dates for corn. That yield penalties overall don't tend to be large until you get extremely late planted corn. And for the Midwest as a whole, for the Corn Belt, we still kind of think mid-May, May 20th, before you really see those huge yield penalties for late planting. So everybody would like to plant early. We would like to see the crop planted early, but until it gets really quite late, we would not be expecting a large yield penalty at this point. The other thing is to remember that the experience of the last 2 years, it's not so much how the season starts that matters, it's how the season ends that really is going to affect yield. The third question is that could soybean acres get even larger if late planting sees farmers switching away from corn? Yeah, I think that's tied into the answer to the previous question. History, I think, suggests that that you really have to get very, very late on corn planting to see a major shift to soybeans, unless there's also, in addition to late weather, and there's a strong price incentive to do that. And I suspect what we're going to see over the next few weeks is perhaps the price incentive moving in the other direction a little bit, perhaps trying to motivate a few more corn acres. So I'm not looking, at this time, would not be expecting a further shift to soybeans away from corn. So just reading the question here, that I guess the bottom line of this question is, what does the December and March stocks report on corn imply for the June stocks? And probably the short answer is nothing. We have seen surprises in stocks reports in both directions, and we have seen some tendency for surprises to be offset from one quarter to the next. But you'd have to say that given where we are through the first 2 quarters, that the cumulative effect is not a major surprise at this point, and would not suggest that the June report has to offset any big surprise that we've experienced so far this year. So I think we'll fall back when we get close to the June report. We'll fall back on that same analysis of trying to anticipate what feed and residual disappearance will be, and based on where we are through March 1, we should expect a pretty normal seasonal pattern of that to be reflected in the June report. The question is how much of last year's prevented acreage may actually show up here at some point. If you look at the last several years, we've seen prevent planted acres in a very wide range, all the way from 9 million acres, I think, in 2011 to as low as about 1.2 million acres in 2012. And as I mentioned, it was at 8.3 million last year. And it didn't seem to come back, any of that come back in today's report. So it suggests to me that we could find 4 to 5 million acres of cropland in the June acreage report that was not reflected in the March intentions. Question about ethanol production. How much uncertainty due to ethanol production is in your assessment, or is there much uncertainty in ethanol production? For the current marketing year, there's not a lot of uncertainty. We're halfway through the marketing year, and so we know what ethanol production is and what the trends are, and we pretty much know that we will use ethanol up to the E10 blend wall at a minimum, and we think that we have pretty good export demand for ethanol. So there's not a lot of uncertainty, but as I mentioned, it appears that production could exceed the current projection by a bit. Then we get the question that I would like to avoid is how can the USDA justify a 20% increase in feed use with fewer grain-consuming animal units? I guess there's really two parts to that answer now. One is that through the first half of the marketing year, the stocks numbers kind of justify the USDA's projection of 5.3 billion. Part of the reason that we're looking at a 20% increase is because last year's number was unusually small. So I guess you could ask that in either direction. Is this year's projection too big, or was last year's number really unbelievably too small? So the first part of the answer is, well, we verify through the first half of the marketing year we're on track. And then the second part of the answer is you have to remember that this is feed and residual use of corn. And nobody is measuring feed use. We don't really know how much corn is fed. All we know is that we have a production estimate, and we have an estimate of how much corn was exported and processed, and that residual is in the feed category. So there is a tendency when the crop is big and prices are low for residual use to be large and vice versa. And so we're in a big crop year, low price year. We would expect a big residual use of corn. The second would be a piece of that. I guess the third piece would be we have been feeding a lot of wheat the past 2 summers, and particularly last summer. We would expect that to be a lot smaller this summer. We would also expect at this juncture not an early harvest of the 2014 crop, and with a later harvest that's going to push more feed use back into the summer quarter this year. So regardless of whether it makes sense or not, it appears we're on track to do that. Planting is slow in the south. When will they run out of time to plant? For corn, I would guess that would be sometime in June that they would run out of time to do that. So I don't think that's a big concern at this point. With an average price of $10.50, do you have a projection for fall prices at the scale? I guess the fall price projection would be pretty much the same as the season's average price. No reason to expect it to be a lot different than $10.50 if in fact that is the right price. We've got a question about crude oil exports. I'm going to let Scott handle that one.
Okay, the question is, will any government decision to approve the export of crude oil affect corn and ethanol prices? In the short run, I would say no. There's very little direct impact from that decision. The background to answer that question is the U.S. has a restriction, basically bans exports of crude oil. So what we do if the economics are favorable for exporting crude is we instead export the refined products, mainly just gasoline and some diesel, instead of exporting the crude. So if you allow crude oil exports, we probably won't export as much of the refined products. So the net impact there in terms of the true demand for crude in a world market sense is really not that big. So again, that would be my answer to why I don't think it would have a big impact. The only place that you might see some is if there is a trend towards using ethanol in gasoline exports in a complete blend. It's a little hard to get data on that. Then if we switched to more crude exports in the future instead of the refined products, there might be some potential for a small amount of weakness in ethanol use. But overall, I think the answer is I wouldn't expect big changes or impacts on either corn or ethanol.
One other question, with the latest reports out of Brazil of less than expected yields, is there any talk of how that might have an effect on estimates of building up our inventory? In the case of soybeans, smaller production in Brazil or South America in total compared to expectations would tend to bolster our export prospects, and I think that is reflected in my balance sheet for next year in terms of pushing U.S. soybean exports on up to a new record level next year. So that will limit the buildup in inventories, but if we have the kind of crop implied by today's intentions, we will still see some build of U.S. inventories of soybeans next year. That's all the questions we've received, so we're going to conclude this webinar. We would ask you that you check our website for a recorded version of this event. We want to say again we appreciate your participation, and please join us again and visit our website for an updated event schedule. Thank you.